Hey everyone, this is Dan with Data Trend. Today is Wednesday, March 2nd, 2016. It's about 3:30 p.m. or so Mountain Time. The market's closed an hour and a half ago. I'm getting the videos out today, tomorrow, and Friday as well of this week a little bit later than usual, so they might not be out just right at the same time. Normally I get them out right after the close around 2:30 Mountain Time and then probably online by 3 or so Mountain Time, but I have some things going on and I won't be by the computer a lot this week, so I may not be able to get the videos out in quite the same schedule that we're used to. But at any rate, let's hop over and look at the markets. We're on the daily chart of the Russell 2000, where we're sort of in this process of crashing up. So the market closed here today at 1065.67. It was up 1% after a pretty strong day yesterday, just about 2% higher. So we're up about 3% in the past 2 days or so. We got involved in the April CIB back here on February 22nd, and since this time, the market has more or less just kind of headed vertical on us. We've been moving the position higher, adding to it, and then today I was forced to roll it up as well because the market just continued to push up and through this expiration break even. So the current expiration break evens for the position now sit right up around 1078, 1080-ish, and then on the downside it's down around 1005. So we've really moved the position quite a bit higher from where we started, where the upper expiration break even was at 1040, so we're essentially 40 points higher than we were initially. This 1080 level does have the potential to act as resistance. It corresponds kind of with this low here on the daily time frame from back in, I guess, September of last year, 2015, September 2015, but it doesn't mean that the market will find resistance there or that it'll stop. I mean, it can certainly continue higher, and that's kind of the pattern that we've been seeing play out here, both on the daily time frame, the weekly time frame, and also the intraday as well. So if we drop down to the intraday time frame, you can see we were watching this box, which was from about 1035 down to 985. The market kind of poked up and above it and basically pulled back to that upper level, and from there it's definitively moved higher over the past 2 days. Sort of a smaller pullback in here maybe would bring the RUT down to the neighborhood of 1045 or so. That corresponds with the rising 5-day simple moving average. But for the time being, there's really not any reason to think that the market's going to pull back significantly or pull back extremely deeply. I mean, we do have a kind of a broken chart here on the daily time frame, and so that's conflicting. But on the shorter term time frames, the momentum continues to be higher. And until that changes or we see some pattern of higher highs or lower highs and lower lows develop, at least on the shorter term time frame, we just have to kind of assume that this is going to continue on. And certainly the market can continue for longer than any of us expect, and that's, kind of what it feels like in here at times. We've come from about 942, 943 up to this close today at 1065. This was back on, let's see, February 11th or so. So we're up about 13% from that time. So it's a pretty good move, and just to say that the market's overbought is certainly true, but it doesn't mean that it can't continue higher. So in the time being, what we're going to have to do is just keep managing this position and keeping an eye on it. Let's hop over and take a look at it. We are starting to lock in some losses, and we did lock in some losses today when I made an adjustment. So the position as of the close yesterday had a butterfly down here at 1,000, another at 1020, and another at 1040. Today what I did is I sold out the 1,000 butterfly and I moved it up here to 1060, and I also closed out one of the two 104 IWM calls. So we're left with one 104, four of the 105s, and then we still have that 96 put, which is really not doing us a whole bunch of good at this point, but may be valuable at some point in the future. We certainly don't know. So we'll just wait and see. Okay, so we're on RUT. So if you come down here, we can see we have the order to close out the 950, 1000, 1050 butterfly, and also this was the initial order to buy it. So those are both included in this expiration risk graph up here. And we have the three butterflies at 1060, 1040, 1020. So the position as it sits today at the closed here at 1065.67. The delta is negative 527. The gamma is negative 0.34. The theta is about $33 a day. The vega is negative 126 almost. And the open loss on the trade is about negative 320 or so. And so this is for two butterflies, so we're not over the risk threshold or anything like that at this point. We're about, I guess, about halfway there or so, something like that. But my biggest concern, we were forced to make this adjustment. We can't sit in the position and hope that the market's going to turn around and come back for us. But the biggest concern in this position now is that we get a fast move lower. So on the downside, what I'm going to be looking to do is to defend the butterfly. And one of the first things I would do if we start moving lower from this 1065 level, say we get down into probably into the neighborhood at 1040-ish, what we'll be doing is thinking about closing out the 1060. We're definitely going to be selling out some of these IWM calls, and we're just going to try to take this T+Zero line, and we're going to try to flatten it out and shift it slightly shorter delta as the market moves lower, if the market moves lower. On the upside here, we're in a relatively safe position. We have some room to run up to 1080. That's going to still keep us, if the market was to gap up there to 1080 tomorrow morning, we'd be looking at an open loss of about 420 or so. And so we're still okay. We're in the position. On a gap down tomorrow, we'd be looking at a similar loss of about 415, 420 if we were to gap 3% lower. So for the time being, we're relatively safe in here. The Greeks are under control, but we do have this open loss that's been locked in now because we've had to adjust up so quickly. And that's just part of the trade, and it's part of playing the game. I mean, there's nothing that we can do about that. Not making that adjustment today would definitely have been irresponsible because the market's pushing up and through, and we would have been sitting kind of in this sea of death, it's often called, where the T+Zero line starts to sag off into the front of the body of the butterfly or outside the body of the butterfly. And we didn't want to go home overnight sitting in the sea of death. But at any rate, that's all I have for today. We'll see how things shake out. If the market continues higher, we have a little bit of room to run there. If the market does decide to pull back a little bit, that would be great. If it decides to pull back a lot, we're going to have to start adjusting this on the downside and just controlling the T+Zero line. So if you have any questions, feel free to shoot me an email, info@thetatrend.com. Thanks for watching.